What I wanted to talk to you today is about a question that my team has told me comes up incessantly, and it's regarding candlesticks. And what my team told me is that the most predominant question relating to the topic of candlestick charting is whether or not the traditional candlestick format is inferior to another type of candlestick, a more modern, a more recent formation or version of candlesticks, such as I think it's the Heikin Ashi. And I think that's the number one question. Oliver, I see that you use traditional candlestick charting in all of your work, but what about Heikin Ashi candlestick sticks? And what about this version and that version, what have you? And I'll start off by saying this before we go to chart so that I can show you a difference here. The first thing I will tell you is that any form of charting is better, any form of candlestick charting is better than nothing. So I feel that the candlestick version of charting is far better by orders of magnitude than your regular bar charting. It requires more thinking and analysis. And so the candlestick drops the need for thinking and analyzing as much as the regular bar chart requires. So I like that. So any form of candlestick charting is better than bar charting. Any form of candlestick charting is better than line charting. I wanted to get that out of the way. Candlestick charting, in my opinion, is superior to all the other major forms of charting. Now we get into splitting the hairs. Is the traditional form of candlestick charting better or inferior to Heikin Ashi? Is the traditional form better or inferior to volume candlestick charting, and so forth and so on? And that's what I want to talk to you about today. In particular, the difference between traditional candlestick charting and Heikin Ashi charting. They both have benefits, but I'm going to tell you why. I'm going to explain to you why I prefer the traditional form over the Heikin Ashi form. But I will also show you what's superior about the Heikin Ashi form of candlestick charting. So let's do this right now, if you'll allow me. Okay? So what you are looking at right now is a 2-minute chart of strategy. It was formerly known as MicroStrategy, the Bitcoin treasury company run by Michael Saylor. All right, I'm a big fan. Every bar represents 2 minutes of trading. You have two main moving averages. If you followed my work for any particular time, you know that I do not look at a chart unless it involves or includes the 20-period moving average, that's the blue line, and the 200-period moving average, that's the red line. 2-minute chart, 20-period moving average, blue line, simple. 200-period moving average, red line, simple as well. Candlestick format that you're looking at are the traditional regular candlestick, which involves all the data points of a period. So if we're talking about a 2-minute period, your 2-minute bar, for instance, this 2-minute bar is going to show you the high of the bar, the low of the bar, the open of the bar, and the close of the bar. And if we take another example, I'll blow this up so you can see a little bit more detail. If we look at this 2-minute bar, the traditional candlestick is going to show the low of the bar, the high of the bar. It's going to show you where the bar opened and where the bar closed. Now, the close and the high on this bar happens to be the same. But one more time, if we I want to take a bar that has all 4 data points very clear for you. If we take this bar right here, you have the open of the bar, the close. How do we know which part of the box is the open and close? Well, if it's red, the open is the top of the box, and the bottom of the box is where it closed. If it's green, the open is the bottom of the box, and the top of the box is where the bar closed for that period. We're looking at a 2-minute period. We also have in the traditional candlestick format the showing of the low, that's going to be at the lower extreme of your bottoming tail or wick, and the high, which is going to be at the upper extreme of your tail or wick, okay? So in the traditional form, you have all 4 data points, okay? In the Heikin Ashi, if I were to show you this and flip this to the Heikin Ashi, you're going to see a more smoother version of the bars. Why is that? Because it doesn't give you all 4 data points per se. It averages those 4 data points into a general average. So it takes the highs and averages the highs. It takes the lows and averages the lows. It takes the opens and averages the opens. And it takes the closes over a certain period and averages the closes to give you a more smoother, cleaner look to the chart. Now, here's the important thing. That's the difference. In the traditional form, you have all 4 data points every single bar. When you average those data points, you lose the specific detail, the precision. You lose precision every time you average. I want you to think about what a 200 period moving, what a 20 period moving average does. It averages all the individual bars over the past 20 bars. So you lose the detail of each bar in exchange for seeing a smoother representation of all of the individual bars. Now, that doesn't mean that it's worse than the other when you lose the detail. It just, you have to pick your poison. What are you after? Because there are benefits to smoothing the data out. But there are also benefits to seeing precisely where a specific point is. All right? So listen, when I need to know, I want my traders to know exactly to the penny where you hit this thing up. I need you to know. It can't be vague. It can't be, it's in the area. Oliver, I'm entering in the area at around here. No, not around there. I need you to tell me to the penny where you're going to risk your capital or my capital. Not, oh, I'm going to risk your capital around this, in the vicinity of this price. No, there's no vicinity when it comes to you risking my money. I need you to tell me to the penny where my money is going into the market, where your money is going into the market. I want to know precision. I need the regular candlestick bar for my entries. I need the regular candlestick bar to know my precise stop out point to the penny. I don't want an average stop out price. I don't want a general area where I get out to protect my money. So when it comes to entries and exits, it is regular candlestick, hands down. I need that precision. I need that precise high of my entry bar, or I need the high price of the previous bar if I'm going to enter 1 penny above the previous bar. I need the precise low of this bar or this event if that is where my stop is to the penny. I don't want it vague. I don't want it average. I don't want it freaking smoothed out. All right? So when it comes to entries and exits, I need that precision that the classic candlestick chart gives me. Now I'm going to go to you, and I need to make sure before I move on that you understand this point, that you understand the difference. Let me know, yes or no. You understand the difference between what the Heikin Ashi does? It averages and smooths it out like a moving average, and the classical doesn't. It gives you the precision, price per price, bar per bar, period by period. There's no smoothing out of the data whatsoever. I need you to make sure that you understand me when I say, when it comes to entries and exits, there's nothing more superior than that level of precision. Make sense? I'm looking at your charts. Just want to see a few yeses. Make sure we're still on the same page. All right? Make sure everybody understands what I'm saying. Excellent. Very important to understand what is going on here. When I say that I need the precision when it comes to entries and exits. I want to give you an example of this precision. My traders playing MicroStrategy would see this bar in particular being what's considered to be a clearing elephant bar, not too far away from the 20-period moving average. So here's an elephant bar, that bar right there. Why would they consider it a clearing? Because this is the bar, there's a little one there, but we throw little ones into the big bar, okay? So what's really happening here is that you're getting a complete clear. This is the first bar that is really clear of prior price data. That's what makes it clearing. It's clearing price data. So if you look to the left of this bar, there is no conflict or colliding with former data. You have to go back a ways to see former data. There's no former data right next to it in the recent vicinity of this bar, making it a clearing elephant bar. Very powerful short signal on the downside. You can have clearing elephant bars to the upside as well. But this clearing elephant bar to the downside would suggest there's going to be follow through, especially since you have an overhead 200 above you that is bearing pressure on the stock downward. You also have an overhead 20-period moving average bearing pressure above you, and the space between the two is also like a concrete ceiling of resistance. You see that? So that block of concrete there, guys, above this clearing elephant bar that's dangling down there like that, means that an upward move, you don't have to worry about anything. That ceiling is going to keep that upward move intact. This should have follow through to the downside. Now, I'm going to show you where the precision comes in, okay? You see, in addition to whacking this bar, my traders would be taught to enter this bar. Come from way over here. Boom! Enter that bar before it closes. Enter your clearing elephant bars before they close. But also, they're taught that you must also enter on the first color change. Now, if you followed my work for any period of time, you understand this. You must additionally hit your play up on the next color change. So you enter the igniting event and you add on the first color change. Well, if we go back to the chart here, what's the first color change? It is right here. When you get green, is taken out, sorry about my puppies, excited here, taken out by red right there. So your next color change add is here on that follow through red point that breaks the low of green. I need the precision of the low of that green. Do you understand? I need to know when that green finishes, where's the low? And if a red bar breaks that low, 1 penny below that green bar is my next entry. So I enter 2 lots on this one, 1 lot on my add, and boom, I've got my 3 lot position. Or in some cases, my 4 lot position, 2 and 2. So that's the kind of precision that I need that is offered by the classical candlestick, the classic candlestick variation. If I change this to Heikin, look at what happens to this point there. Watch this. Look at what happens to my color change opportunity. Heikin Ashi, it disappears. Do you see that? Even it becomes a little harder to know where's my clearing elephant bar But where's my color change? There's a hidden one here if you want to get very specific, but that's a little bit more advanced. My color change is not there. The next color change reality is way down here. So I missed this opportunity here that was there. I get a late color change all the way down here. And I get another late one down here. When in fact, if I went by classical standards, I would have made a lot more money. I would have made a lot more money doing this. Let me change it back. I'll show you. I would have entered this bar, boom. I would have entered that color change, boom. And where you see the next entry point, my entry point is here on classical, but my entry point on Heikin is here. Look at the difference. Look at the profit I gave up by entering that late. Instead of my second entry there, my second entry on Heikin is here. I want you to see the huge difference in price here. Let's call that 387 to 385. So that's like a 2-point difference. On 1,000 shares, I just gave up $2,000 in profits. And because it's 2 lots, that's 2,000 shares. I gave up $4,000 in profits. Just because I wanted my bars smoother. I want my bars smoother, Oliver. No, man. I need exact precision. I make more money when I have exact precision that way. Did you understand that example? Let me know. All right, I'm going to take a look at you, look at your comments here. Make sense? I'm looking at your comments here. Does that make sense? Last point I want to make for you. Let me explain to you when Heikin Ashi, or under what circumstances Heikin Ashi can shine over classic candlesticks. Like I told you, they all have their strengths. This is where it shines. Let's go to the charts again, okay? Anytime you are averaging something, it is always better during a trending market. When you average during a sideways market, you get killed. All right? Look at the average. Look at the averages. Look at your 20-period moving average and your 200-period moving average here when the market's sideways. It's kind of disrespecting the moving averages. The stock is acting like the moving averages are meaningless. I can spend time above you. I can spend time below you. I can sear through you anytime I want. That's what the stock is saying. You make no difference to me. I can sear through you anytime you want. Here I'm below. Now I'm above. I'm above the 200. Now I'm below the 200. I'm above the 200. Now I'm below the 200. When they're flat and not trending, when they're trying to average a sideways movement, moving averages are horrible. But look at when they start to become obeyed, right? So for a period, your 20 starts to trend. And now it's obeyed a little bit more, you see? You see how the 20 is trending and now it's obeyed. So moving averages become, the 20 becomes more powerful in a trending state because it's an indicator that averages. Anything that averages becomes superior in a trending state. When it's not a trending state, it's horrible. So likewise, Heikin Ashi candles are an averaging, it's an indicator that averages, which means that its superiority lies in a trending market. Now, I want you to look at how this is the classic trend to the downside. You see the noise there? So this is your whole movement to the downside in classical. All right? I want you to look at the jags, the jigs, the wigs, the zigzags back and forth. Boom, 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 boom. Now, if you don't know what you're doing, these can fake you out, cause you to panic out of your play when you're trying to maximize the whole movement down. Well, Heikin Ashi candles can help you when your stock is trending smooth that out a little bit. So now you get a smoother, all right, it still couldn't smooth this out because that move up was too big, but you get a smoother move during the trending markets. Why? Because it's averaging out the noise. So if I were to say use Heikin Ashi, and I'm not, but if I were to say it, if I were forced to make you use it, I would say only when your 20-period moving average is trending. Meaning, only when your 20-period moving average is doing this on a stock, and only when it's doing this on a stock. Oh, I did it the wrong way. So when your 20 is trending, Heikin Ashi candles can have some superiority in helping you hold on. But in truth, you don't really need it because that's the purpose of the 20-period moving average in the first place. I could hear the 20-period moving average saying, bro, what are you doing? I got you. I do that. I do the averaging for you. You don't need something else. Relax. I got you. You understand? So the 20-period moving average takes care of you. Let's go back to the classical. And if you're rocking with the 20 and taking profits away from the 20, entering at the 20, taking profits away from the 20, entering at the 20. So you're taking profits away from the 20, entering on the color change or the event at or near the 20, entering away from the 20. You see? We exit away from the 20, enter near the 20. So the 20's got the average for us. We don't need the bars averaged themselves. We need a separate indicator outside of the bars that's giving us a smoother picture of the bars. So we have the precision in the bars, but the smooth out version of the bars in the moving average. So we have both, but they're separate. With the Heikin's trying to give you the smooth aspect of it in the bars, so you lose the detail in the bars. But the details we need for entries, exits, and stops. So we lose that. So I say, whenever you want to know the answer of whether I believe something is superior over another, just look at what I use, because trust me, this is as certain as night follows day, people. Do you understand? This is as certain as night follows the day. If I find something that is superior to what I have, I'm going for it. If I'm not using it, it means that I haven't found it to be superior to what I have, to what I use.